Today, I'll be talking about what makes Lululemon a powerhouse in the athleisure industry. From its fiercely loyal fan base to its cutting edge innovations, I'll explore the core strengths that set Lululemon apart and take a deep dive into the finance. One of the main reasons why Lululemon has such a strong success is its core competencies. Its first, unmatched customer loyalty and community is extremely important. Lululemon isn't just selling leggings, it's selling a lifestyle. One of its biggest strengths is the fact that it has a cult like customer base. Unlike competitors, Lululemon makes every shopper feel seen and valued, whether through in-store experiences, free yoga classes, or an educated staff who helps build real relationships with all of its customers. This focus on community has created brand loyalty so strong that customers keep coming back even at the premium prices that are offered. In fact, Lululemon's Net Promoter Score, which is a measure of customer loyalty, is one of the highest in retail, proving the emotional connection that is driven by sales. Next is its innovations and patents, which is the tech behind all of these leggings. Have you ever wondered how Lululemon leggings feel so nice and feel like a second pair of skin? It's because of the science. The company holds over 600 patents, with 75% focused on fabric tech and design. Think moisture wicking, anti-odor, buttery soft materials you can't find anywhere else. They invest heavily in research and design, ensuring their products stay ahead of the competition. This patent moat means customers who want the signature fit and performance have no substitute, locking in the long-term demand for many consumers. I'll be talking about the financial health of Lululemon with a ratio analysis deep dive. Profitability ratios. Lululemon prints money. Its return on equity is extremely high, meaning Lululemon generates massive profits from shareholder investments, which is why their stock keeps climbing. Their gross margin is industry leading, showing they retain strong profits after cost, thanks to premium pricing and efficient operations. Also, its return on investments are 22%. This is far above competitors, proving they use assets efficiently to drive sales. Next would be some potential red flags with Lululemon's financials. The liquidity and efficiency of it all. First is the quick ratio. It's 0.74, which is below 1, which is a little bit concerning, which means they may struggle to cover short-term debts without selling their inventory. Another important factor is inventory turnover, which is declining yearly, which could mean they are overstocking, and a risk is definitely there if trends start to shift. Next would be the debt to equity ratio, which is stable, but with how the economy is looking now and everything that's going down, high debt could become a problem if the economy continues to worsen.
Continuing with financial health, the current ratio shown here is a key indicator that compares a company's assets to its liabilities. This helps us understand how well a company can cover its short-term obligations, essentially giving us a snapshot of its liquidity. Lululemon appears to be in solid financial shape. Despite a setback in 2021, largely due to the pandemic and global shutdowns, of course, Lululemon has shown strong growth and continues to perform extremely well. Another important ratio shown here is the debt to equity ratio. Lululemon's ratio is below 1, which means it's primarily funded by equity rather than debt. That's a good sign because it suggests financial stability. However, with economic conditions becoming more uncertain and new tariffs on the horizon, there is a potential for this ratio to increase. If costs rise and profit margins tighten, even Lululemon's loyal customers might start looking for more affordable alternatives, especially given the brand's premium pricing.
So, what's the verdict with Lululemon? Lululemon's core competencies, brand loyalty, and innovation give it a near unbreakable moat. There's no other place you can find that has the type of innovation and brand loyalty that Lululemon has. This is demonstrated through their insane customer base, their amazing products, and the premium price they offer that still has people coming back every time because they can't get it anywhere else. Financially, it is a profit machine with high margins and return on investments. This means it would be a great stock to invest into, and its return on investment and return on equity shows that it can be extremely profitable no matter what. But some of the red flags can show with liquidity and inventory turnover, which need to be monitored to sustain long-term growth. Without monitoring these, You could have a lot of pileup of inventory and end up going bankrupt with all the inventory that you have just sitting there if trends change or the economy happens to worsen in some way. Ultimately, as I've stated before, Lululemon isn't just a clothing brand, it's a movement.